Good morning and welcome. You are watching Buy Now, Sell Now on ET Now. I'm Nupur, and over the next 1 hour, we will be taking your stock-specific queries, so do keep them coming in. Let's quickly begin with a look at how the markets are doing even as we speak. Well, the breadth seems to continue to be negative. The Nifty currently holding above the 24,200 mark, but not really doing very well over there. The Sensex also down about 0.2%. Looking at the Nifty Midcap 150, that's also shed some points over there. The Nifty Small Cap 250, also trading in the red. Now, looking at sectors at this point in time, we can see most of the sectoral indices in the red, really. The only ones that are holding up right now is a Nifty Defense. Now, in that, we are seeing some gains coming in from Cyan. Do remember that this is over the investor day, as well as the commentary that came in from the management. The other ones are Cochin Shipyard and BEL. Apart from that, if we look at other sectors, Nifty Pharma is still holding up the candle a bit. We've got Alchem, Cipla, Divi's Labs, all of those are the top gainers. But lots of the other sectors completely in the red. Now, in fact, one of the stocks that has been sliding today is Tata Power. Now, it is sliding on the back of Kleros Capital filing an arbitration case. The Singapore court has dismissed Tata Power's plea to overturn the case and announced a large sum as the penalty. Ashesha is joining us with more. Ashesha, good morning. Thank you for being with us. Ashesha, not looking good, really, Tata Power, but what's important is that they need to pay a huge sum to Kleros.
Yes, negative development that has come in for Tata Power, and that is exactly why the stock is declining in trade today. So Singapore International Commercial Court has now dismissed Tata Power's challenge to overturn the earlier arbitration award. They've now ruled that Tata Power is expected to pay a sum exceeding 640 million US dollars. This totals to about 6,000 crore Indian rupees, which is 5% of Tata Power's market capitalization, and that is exactly why the stock is declining in trade today. Now, how is the $640 million derived? It is about $490 million of claims plus further arbitration cost of about 10 million US dollars, coupled with interest at the rate of 5% since November 2020. This is to be paid to Kleros Capital Partners Limited. As I mentioned, this translates to a total of 6,000 crore Indian rupees, and that is exactly why the stock is declining in trade today. The company, however, has said that they will appeal against the decision to the Singapore court. The company has not created any provision, which means if this is to be paid, this will directly impact the profitability of the company. Now, the matter, in fact, relates to a proposed mining project in Russia. This was initiated by Kleros in November 2020. It was against some disclosure agreements that were entered into by Tata Power, but there was alleged breach of those agreements that company had entered into. So this is a brief background. But as of now, 6,000 crore is the payable by Tata Power, for which the company has not made any provisions. And if it indeed has to pay, then this will be a big hit on company's P&L.
All right, Ashesha, thank you very much for joining us with those. Well, we now continue to, we will actually begin to take all your queries live, so do send them to us. And joining us on the broadcast right now is Kunal Bothra, as well as Sharmila Joshi, who will be tackling all your fundamental queries. Both of you, thank you. All right, let's begin right away with the first question that we're getting in from Rao from Hyderabad. The stock in question is Hindustan Unilever, and he's got 125 stocks, and the entry price is 2129. Now, he's got another stock over there, that's Tata Consumer, a quantity of 625. The entry price is 200 rupees. All right, so the question revolves around both of these, and he wants to know, shall I add more at current prices? Please advise me. So, Kunal, would you like to take this one first?
Good morning. So I would suggest to hold on to both of these stocks. I think both Tata Consumers as well as HUL, they are going through their fair share of a downtrend. We've seen that the FMCG sector overall has underperformed in the last, say, 6 months to broadly 1 year. But I believe that now many of the stocks are coming back into a good value territory. And frankly, I think these FMCG stocks, they have this knack or a characteristic that these stocks can remain into a corrective zone for a prolonged period of time. And then when these stocks come back into recovery, we've seen historically that the recovery happens quite swiftly into these names, and then these stocks go into a prolonged kind of an uptrend. So I believe it's a matter of time over here. My assumption is that you're a long-term investor. If that's the case, I would suggest to hold on to both these stocks, HUL as well as Tata Power, as well as Tata Consumers.
Okay, that's a take on on the charts for both of these FMCG majors, HUL and Tata Consumer, both nifty companies as well. Sharmila, hi, morning. Fundamentally, how do both of these large cap staples from the FMCG pack look like? And would you rather invest in some other FMCG companies? How else would you be playing consumption if not these two names?
Overall, let me just say at the outset that I own both the stocks and I'm not selling them. Having said that, I think between the two, I prefer Tata Consumer because the story that we have developing with the kind of shopping that we are now doing, and their Tata Sampann brand, as well as the fact that they have coffee, Starbucks in their portfolio. To my mind, it has more of an upside than HUL. But there's no taking away from the fact that at this price, HUL again is at very attractive valuations. So again, let's not forget the fact that I think neither of the stocks has really done anything special over the last couple of years, especially HUL. I think it's been quite the underperformer. But both are very good quality stocks, so I'm very comfortable holding both. And if I had additional money, as I said, I would probably add Tata Consumer at this point before I added HUL. But both are good from a valuation perspective. So overall, FMCG is a sector that I like. You need to be with the defensive. So I think just continue to hold both the stocks.
Okay, that's a take coming in on the fundamentals as well, on some of those large cap FMCG staples, Tata Consumer as well as HUL. Shamina, we'll come back to you for this query coming in from our viewer Sumantra from Delhi, writing to us. The stock in question is IRFC and our viewer holds 100 shares at an entry price of 100 rupees per share. Asking, is there any near-term possibility of price rising, or do you believe the railway story has ended?
Hasn't ended, but the kind of euphoria that it had in between, I don't think we are going to see that return in a hurry. That said, I think the stock is at very attractive valuation, so you should continue to hold.
So the next question that we are picking up is from Anita, writing in to us from Hyderabad. The stock in question is Bank of Baroda, holding a quantity of 800. The entry price is 150, and the time horizon that she is seeking advice for is 1 month. Will it increase to 290 per share? Should I sell or hold for 1 month? So Kunal, what is your sense on Bank of Baroda? The broader banking sector, of course, has been seeing some sort of selling pressure. But do you expect a recovery on this?
So don't expect a recovery towards 290. I think that will be a little bit of a steep ask for a stock like Bank of Baroda. It's still struggling in terms of the trend. You look at the last 2 months, almost I think from mid of July or the second week of July, we've actually seen Bank of Baroda to be trading in a range of 10 points, 235 as a support, and then 250 broadly as a resistance for the stock price. So after a correction previously, the stock is going through a sideways range. Difficult to anticipate any kind of a bounce back on Bank of Baroda for the next 1 month.
Okay, that's the take on Bank of Baroda on the charts. Shifting focus then, Sharmila, coming to you. Our viewer, Mr. Jaydev, is writing to us from Bengaluru. The stock name is Urban Company. Our viewer holds 3,000 shares at an entry price of 169 rupees per share. Stock currently at 166. So very nominal loss right now is what he's seeing on his holding. His question is, please let me know your opinion on investing in Urban Company at present levels from a 4 to 5 year perspective. And another query coming from him is also, please also let me know your opinion on purchasing NSE in unlisted market at present rates. What would your opinion on both of those be? Urban Company from the listed space, of course, and NSE from the unlisted market.
So first of all, Urban Company, I think I just, when we were talking of Tata Consumer, I sort of touched upon the fact that I'm very positive about the kind of trend that we're seeing for online shopping, etc., in the Indian context. So anything that really caters to online shopping or any online sort of a service which urban company provides. You can call an electrician and somebody to some pest control, etc., etc. You can schedule the service, and they are doing a great job. So I think from currently you're seeing a lot of usage for these in the metros, but this is bound to expand into tier 2, tier 3, and even within the cities, the penetration is likely to get better. So I'm very positive on the stock, and I think with the 5 years sort of a perspective, you should definitely continue to hold. Do keep checking on the story every 5-6 months, but definitely stay put with what you have. Again, NSE, I don't know whether you need to hurry and sort of buy unlisted, because we are going to see the IPO pretty soon. But again, a story I'm very positive on, both the exchanges, BSE, NSE, even MCX for that matter. Overall, I think that this trend of people investing in equity markets, either through mutual funds, direct equity, or participation through commodities, is only going to go up. So yes, I think if you are getting a good deal in the unlisted market, why not? Because it is, I mean, the exchange is something I'm positive on, as well as the overall exchange as a investment idea.
All right. So Sharmila does support that exchanges as an investment idea, but taking up another question coming in from Delhi, Rakesh Gupta writing into us, the stock that he's wanting advice on is Bank of Maharashtra, and he's holding about 26,575 shares. The entry price is 80. Do I hold or sell at the current market price? Currently, the stock, of course, trading at 84 rupees 51 paise. So he does, have an upside on that. Kunal, what would you advise him?
See, I think the long-term charts are positive. For Bank of Maharashtra, the stock has done very well, even in the last 1.5 year. And in the last 1.5 year, start of 2025, we've seen so many PSU banks and the private sector banking stocks actually being, seeing a corrective wave. In that time span, Bank of Maharashtra has doubled almost from 43, 44. The stock has now jumped up to almost 84 plus levels. So the long-term charts are quite attractive. I'm not sure if the time frame for the viewer is very, very short term. If it's very short term, like only for the next maybe few or trading sessions, then maybe it's a good idea to try and book profits at the current levels of 85, 86 thereabouts for Bank of Maharashtra. But if it's specifically long term, by that I mean at least 12 months to 18 months, then I think it makes sense to hold on. So the answer really lies on what's the time frame and what's the holding period of the viewer.
Thanks, Kunal, for that view on Bank of Maharashtra on the charts. Just taking a quick look at the market once again, we're now lower by about 2/10 on the Nifty, 24,150. Thereabouts is where we're at, and significantly off the day's highest point, and in fact, very close to the day's low is where we're trading. Let's also take a look at how the FNO universe is shaping up at this hour, and Sajid is taking us through that. He's joining us on the show. Sajid, over to you.
Thank you, Sri, for that. The Nifty below the 24,200 marks, down 0.2% there, but we're seeing some shorts getting built in Nifty. So the open interest is up nearly 2.2% in today's trade, with the premium at nearly 153. Nifty Bank is trading absolutely flat in a range. There too, we've seen some kind of open interest additions happening, nearly 1.4%, but the premium is at 300 points to the spot at this point. Look at this constituents of Nifty Bank. You'll see that there's a long unwind happening in HDFC Bank. There's a short covering happening in ICICI and Axis, and there's a long unwind happening across the board for SBI, Bank of India, Bank of Baroda, PNB. So the PSU Bank in a losing side at this point in time, where a lot of long positions are getting unwound at this as we speak. We are going into the Sensex expiry towards this second half, so you'll see some volatility in some of the banking stocks there. So keep an eye for that as well. But look at call and put writing. 24,200 is seeing a lot of call writing happening, and 24,300 as well. The distribution will show that we're seeing some resistance coming in at 24,200 for that, though the support is at 24,000, and then you have a series of resistance coming at 24,200, 300, and eventually 500. So the narrow band of 500 points is where the Nifty is trading. Nifty in the futures gainers, you have stocks like BHEL, where the stock is up nearly 3.8%. Adani Power is up on the back of long buying, and Amber is up nearly 3% in today's trade. In the losing pack, you have stocks like Some of the losers today are like Manappuram Finance, Tata Power, and K Fintech, where we're seeing the stocks down between 3 and 4% down today in today's trade. But in gainers, you have Tata Power adding nearly 4% in open interest. Adani Power is adding long positions, 3.8% jump in open interest positions, and APL Apollo is adding 3.6% in open interest. In the losing pack, you have Nykaa, where we are seeing a short covering happening. Paytm is seeing a short covering, and Adani Enterprise is seeing a short covering, with open interest down nearly 5% there. Most active stock options. CG Power 900, 13 lakh contracts jump, seeing in the open interest a large portion of open interest coming in today. Premium up nearly 7.85. The stock hovering around 889, up 16.5 on the futures. In the put side, you have stocks like Tata Power 350 September put, where the premium is up 5.8. 21 lakh contracts getting added in today's trade. The stock hovering around 350 at this point in time on the futures side. But the power pack is something which is very active in today's trade, and that's what is getting reflected in the options side. So the market hovering in a narrow range below 24,200 as we speak. There could be some volatility towards the second half.
All right. Sajid, thank you very much for joining us with that FNO snapshot. We slip into a very short break. When we come back, we will be taking your questions. So do keep them coming.
Back with Buy Now, Sell Now, and time now to keep going with all our viewer queries. We've got Kunal as well as Sharmila back with us on the show. And next query is coming in from Mr. Nikhil Sharma on JBM Auto. That is the query coming in. And just taking a look at what this query is and trying to understand what the time frame is. Okay, we'll take this query with Kunal. Kunal, 56 shares of JBM Auto is what our viewer is holding. Entry price was 708 rupees thereabouts. The stock is at 645 right now. He's asking when is the right time to exit the stock, or is it better to hold on? Would you suggest some averaging over here? What should the strategy be?
So I'll suggest to hold on to the stock as of now. Averaging can be done, but I'll just suggest maybe a wait for another week or so. It looks like that maybe the stock is completing a corrective wave, and possibly, I think in this corrective wave, the stock may retest levels of 620, 600 in the near term. So the medium-term charts are attractive. Short-term wise, I'll suggest a wait before averaging out. Just wait for a level of a retest of 600 mark for the stock price. And it depends on how the stock reaches to those 600 levels, whether it reaches in a very slow, gradual manner in terms of consolidation, or whether there is any kind of a sharp correction into the stock price. That will determine the prospects going forward post that. But I believe as of now, hold on to the existing quantity, average out once the stock retests levels of 600 or thereabouts.
All right. So the next question that we are picking up is Samba Siva Rao from Hyderabad, and he wants to know about Siemens Energy. The quantity that he's holding currently is 80, and he's bought it at an entry price of 2910. I want to sell and invest the amount in Siemens Limited or some other energy company for the long term. So Sharmila, would you like to take this one? So he's essentially looking to book profits on this one and perhaps be using those elsewhere. What would your advice be?
So first of all, I would really recommend that he stay invested because yes, I do understand that he prefers the other sector, but I think electric equipment as a vertical also has a long way to go, and I think we are beginning to see the moves in some of the stocks. So I would really recommend just staying put. But yes, I think even a switch to a company like a ABB or a Siemens or something is fine if that's what he would like to do, both those stocks. There are a lot of reasonable stocks within that space. But my basic advice would be to just stay with Siemens Energy.
Okay, that's the take coming in on Siemens Limited. Our next query, a phoner query. Our guest is joining us live on the phone line on the show. We've got Mr. Anand, who's joined us from Chennai. Mr. Anand, hi, morning. Good to be speaking with you. Thanks for your call. You know, both our experts are listening to your query. Please go ahead.
Happy morning, madam. I have got Saxoft at 210. I have bought 1,000 shares. I would like to hold it for long term. For the price correction that has happened, do you recommend a buy call now?
Okay, Kunal, would you like to take that query? Stock in question is Saxoft. Viewer has 1,000 shares at an entry price of 210. Stock around 160 right now. Should he continue to hold or keep buying?
I think the stock had done exceptionally well 2020 onwards. So frankly, I don't track the stock very closely, but just looking at the charts preliminary, the stock had done reasonably well from a point of 2025 in 2020. The stock jumped up to almost 300, and now it's gone through a patch of time-wise, price-wise correction. I would suggest that you can hold on to the stock if your time frame is medium to long term. And I think this level of 150, 160 is a good zone where the stock should be able to take good support. I would suggest that it's a good price where you can look to average out Saxoft.
All right, so a good place to average it out. Let's take up another question that we are getting in from Dubai now. Mohammed writing in, and his question is around car trade tech. The quantity that he's holding is 25 and the entry price is 2,763 rupees. The stock, of course, currently trading at 3,147 thereabouts. Now, he wants to know what is the expected short-term target. So, Kunal, if you can help him with this one, what do you expect in the short term from this stock?
See, short-term wise, it looks like that the stock is hitting a major patch of resistance. 3,150, 3,250 approximately has been the resistance for car trade. The worry for the short-term aspect is that the stock is now forming those, doji kind of patterns. So there's too many shadows on the candlestick, which means that there is selling which is emerging at the higher levels for the stock price. That could probably be a precursor signal that maybe the stock would go into a retest of the 50-day moving average and come back towards 2,800 mark. So if you've purchased at lower levels, you're sitting on good profits. I would suggest that it's a good time where you can look to start booking out some profits and then buy back whenever the stock completes this phase of correction and falls sub to 3,000 mark.
That's on car trade tech. In fact, the stock was under pressure yesterday on the back of the announcement of a management resignation coming in. But on that note, viewers, time to step into a very short break. Keep writing to us and keep calling us on the show. We'll address all your queries on the other side of this very short break.
Welcome back. You are watching Buy Now, Sell Now on ET Now, and we are continuing to take all your questions, so do keep them coming. We have been flashing our numbers for you, so you can pick up the phone and call us as well. But let's pick out another question that we've got in from Rahim, and the stock that he's wanting some answers on is PNC Infra. He's holding 23,027 stocks of that. The entry price is about 233 rupees. Now, the stock currently trading at 198. Now, out of these, the question is this, and Kunal, this one's for you. He says, out of these, 14,113 shares are on MTF at 11.5% interest. Shall I exit the MTF portion? Kunal, what would your advice be?
See, I would advise to hold on to the stock as of now. I'm not sure when you've purchased this stock in terms of MTF, but I would probably believe that the stock is going through a consecutive period of a major downtrend. Very recently, in just the last 10 days, 11 days, is where the stock has corrected almost 10%. And that too consecutively. Day after day, the stock is showing negative price performance. In this kind of a scenario, most of the times we expect that the stock, once it completes maybe 13 to 14 days of price correction, it goes into a bounce back mode. So I would suggest to just wait for maybe some more time. Let the stock show a certain degree of bounce back. If it comes closer to maybe 210, 220 mark, that could be a better off zone where you may want to exit your holdings, whether it's on the delivery side or whether it's on the MTF side.
Understood. So that's on PNC Infra. Let's shift focus. And in fact, Kunal, this query also coming in from you, from our viewer, Mr. Imtiaz, who's writing for Kolkata and has specifically requested for your view. The stock in focus is Dixon Technologies, a stock that we have been talking about for the last couple of days, ever since the MS pack has been in focus. Kunal, entry price at 14,119. That's 14119. And quantity held is 40 shares. What should I do?
See, I think I would probably believe that it's a good time to try and book profits over here for the stock price. If not, then if you're a medium-term investor, then trail your stop losses to maybe 14,200 thereabouts for the stock price, because I sense most of the indicators which we do track on the monthly charts, they have entered into an overbought territory for Dixon, and that generally results into maybe in the next 1 to 3 months a certain kind of a price correction. So I would be a bit wary over here in terms of Dixon Tech chart specifically because of the signals which you are receiving on the monthly time frame. My suggestion would be to book profits, but if you assuming you have a time frame which is more than 1 to 3 months, then maybe trade your stop losses and then continue to hold up.
Okay, and Kunal, the other query from the same viewer is Scient quantity held 314. Yesterday, we've seen a wonderful jump on that one on the back of their FY31 plans and their TAM expansion. Entry price at 1192, and same question, what should I do with Scient is what the viewer is asking.
See, I definitely think that it's a good time to hold on to the stock. Tables seem to finally have turned for Scient on the charts. The monthly time frame charts for the first time, I think the last many months are starting to show signs of a breakout. Of course, few more trading sessions to go for the end of the month. But so far, the recovery, what we've seen yesterday, exceptionally strong jump in volumes. The 200-day moving average reclaimed for Scient. All of that is very positive. My suggestion would be that in case if the stock, say in the next few days, drifts down to 950, 960 mark, try to average it out further in case if there is some room for you to average out the stock price, and then wait for the cycle to turn around back again on the upside. I strongly sense that the medium-term charts to long-term charts will start to improve for Scient going forward.
All right, so that's the view that's coming in on Scient. Moving on to a question coming from Govind from Hyderabad. Now, this one is for you, Sharmila. He wants to know if this is the right time to buy Amara Raja and mobility for the long term. And the amount that he is wanting to invest in this is about 10 lakh rupees. What do you see in terms of the fundamentals of these?
So we have only two listed battery makers. One is Amara Raja and the other is Excite. Within the two, I own and I prefer Excite. Amara Raja is also good. In fact, it has been the market favorite and they do get better valuation. So I think, if you're looking for a battery maker, both to my mind are good place. The only reason why I prefer Excite is because I think, I've been reading more about them getting into EV batteries, etc. And I think that will be the sort of space that will do better. But I think Amara also at batteries at this, Amara Raja at this price is good. I'm sorry, I missed the other stock.
Right, did you get that?
Which was the other stock?
Mobility, Sharmila, that was the next stock. Okay, let's move on to the next one that we are getting right now. Arya from Mumbai is writing in, and the stock in question is AWL Agri. 2,000 is the number of shares that he's holding. The entry price is 522. So he's entered it at quite a bit, when it was at higher levels. Now, what is the future? I am in no hurry for the funds. Can I hold for a year also? So would you like to help us with this one, Kunal?
Well, it's a tough one because, the stock has just been incessantly falling. The 2022-23 highs for AWL Agri has been, I think, around 750 to 800. And now the stock is tottering at 170 to 190 mark. So the correction has been quite steep for the stock price. I would suggest to just maybe wait for some more time because the stock is now nearing the second test of the 200 moving average for itself. If the 200 DMA is broken out, then we may expect the stock to come back towards maybe even 220 to 40 mark. So that could probably help you pare down the losses quite significantly. As of now, my suggestion will be to hold on.
That's a take on AWL Agri. On that note, time to slip into a very short break. Viewers, keep it coming with your queries and phone calls, and we'll address all that and much more on the other side of this quick break. Entry price of 2,900. Should I continue to hold for the long term or add some quantity at the current level? And what's the target price for the next 3 years? Sharmila, any outlook? Slightly longer term query?
Well, you can continue to hold since you're at a 3-year horizon, but I think Kunal is far more optimistic on IT, so maybe you should ask him about this stock.
Kunal, your take on TCS on the charts vis-a-vis something like an Infosys, an LTM, HCL Tech, what is shaped better?
See, of course, the mid-cap IT stocks are poised quite strongly so far. Persistent, Coforce, these are the two names which I've been highlighting and recommending time and again. The stocks have done reasonably well. The large-cap IT stocks are still taking their own, bit of time. TCS, Infosys, largely I think these stocks have underperformed the Nifty IT index as well as their other peers by a decent margin. So it just looks like that maybe these stocks are not yet ready for any kind of a major reprieve or a revival of sorts. I'll suggest to hold on to TCS as of now, but not to not recommending an averaging out at the current levels. There are far better names in the IT stocks where you can look to maybe have a trading opportunity.
All right. So the next question that we're picking up is from Chennai. Now, the stock in question is Max Healthcare. Quantity is 452. The entry price is 719 rupees. Can I sell now or hold? He goes on to say that the quarterly results, of course, have not been encouraging. So what is your take on this one, Kunal?
See, I think Max Healthcare, I believe 1,050 is a good pivot range where you can consider booking out profits. I think broadly, when I look at this over the last 9 months, 10 months, the stock has been moving around this 1,000 mark plus minus 100, points for Max Healthcare. So, it's always better that if you're sitting on good profits, maybe at the midpoint or the upper end is where you may consider booking out profits and then look to buy back once the stock comes back to say 900, 920 levels. So my suggestion will be closer to 1,050 or slightly higher than that level is a good point where you may consider booking out profits on Max Health.
Okay, that's on Max Health. And Sharmila, coming to you, next stock in question is EPAC Durable. First of all, you track the stock?
No, I'm sorry, I don't.
Okay, let's get a technical view on that. Kunal, EPAC Durable, our viewer Mr. Raju is writing to us from Tirupati, and he holds 300 shares at an entry price of 253 rupees per share. Stock is at around close to 200 rupees right now. So 53 rupees in the red is where he's sitting right now, asking if he should average.
Would not suggest an averaging out. I think it's a downtrending stock. Just maybe hold on for some more time. There could be a bounce back of sorts. The RSIs are getting a little oversold for EPAC. Of course, I would not recommend a buy, but then just hold on to the stock. Maybe a 220, 230 could be a price point where you may want to consider exiting the stock.
That's the take on EPAC Durable. Shifting focus then, Sharmila, next query coming for you from Mr. Shankar, our viewer writing to us from Bengaluru. Stock name is NMDC. Yes, the stock name is NMDC. Quantity is 500 rupees per share. Entry price of 88.3 rupees per share. He's asking for a slightly shorter term view, so if you can help us over here. Planning to add another 500 shares. Can I add more now or wait or not add at all? What would your view on NMDC be?
Yes, I think you can add. I'm not a very short-term sort of a person, but the numbers are good. The valuations look reasonable. So I think, yes, you could hold on definitely to what you have, and you may add also. I'm looking at targets closer to 100.
All right, Sharmila. Now, next question that is coming in is from Sandeep. He's writing in from Punjab. The stock is SP Apparels, holding about 30 shares. Entry price is 1,011 rupees. Wants guidance, I think, in the short term. So, Kunal, what's your view on this one?
See, I think short-term wise, the stock has done decently well. I think it's moved up from 660, 680 levels start of 2026 to a recent high of 1,200. This was a phase where many of the textile stocks, I think, had given fabulous return. And now post that, the stocks are going through a correction. I'll suggest to hold on. Weekly chart wise, the stock is forming a bullish hammer kind of a pattern. Looks to be bullish on the weekly time frame. Potentially in the next maybe 3 to 4 weeks, I would expect a decent bounce back on the stock price. And that's where maybe you can probably try and reassess whether you want to continue holding on to the stock or look to exit.
That's on SP Apparels. Sharmila, next query coming in for you from our viewer, Mr. Naveen, who's writing to us from Chennai. Stock in focus is Sheela Foam. He holds 31 shares at an entry price of 850 rupees per share. His time horizon is 5+ years. Would you recommend holding or exiting at the current levels? And if I remember correctly, the latest quarter earnings of Sheela Foam were very strong, but so was the case with its peer Wakefit. How are you looking at this entire mattress segment, and do you believe Sheela Foam is the best placed within that?
Well, it doesn't matter if it's not the best place, but the valuations look reasonable. And I think, what you said, that the numbers have been good. So overall, I think, if you have to look at these sort of proxy to real estate as well as home improvement, etc. So from that perspective, I think if you have a long-term view, the stock is a definite hold.
All right, so the stock is a hold at this point in time. Let's pick up a question that we're getting from Kerala. Vijay Kumar writing to us, the stock in question is NTPC. He's holding about 300 stocks of that one. The NT price is 430 rupees. Sharmila, this one's for you as well. He wants a long-term view and saying that now the price is down, so should I hold it or sell it? I'm a long-time investor.
Definitely hold it. And I think, in light of the sort of news that we've heard on Tata Power today, you may see some money which wants to go into power distribution, etc., get shifted to NTPC. Here again, I think it's a sort of a slow-moving stock, but overall the financials look good. So I think stay invested.
Okay, that's the take coming in on NTPC. Stay invested is the call. But with that, I'm afraid we're completely timed out on this edition of Buy Now, Sell Now. That's an end to all the queries and phone calls for today. But viewers, keep writing to us and we'll continue addressing all of them with our experts in tomorrow's edition of Buy Now, Sell Now. Thank you so much for watching. Keep watching ET Now for more news and updates.